Welcome, everybody. The US crypto news cycle is just pumping at the moment. And with everything going on, we've now discovered that BlackRock has filed with the SEC to register a spot Bitcoin ETF. So let's talk about why BlackRock's attempt to do something that no one else has achieved might actually work. And the irony of this situation is almost too much for me to handle. My name is Jordan, Decrypto is our brand, and we're all here to understand what really goes on in the Web3 space. You guys are what makes our community the most inclusive place to explore and learn about Web3. So before we talk about today's topic, hit the like button and subscribe to be part of Decrypto, and of course, support the channel. So with that, let's get into it. On the 15th of June, Forbes published this article: BlackRock's spot Bitcoin ETF plan appears to be a case of perception bending reality. And if you're not sure why, you're soon going to find out. BlackRock's request to register a spot market Bitcoin ETF looks as much like a self-fulfilling strategy as an attempt to gain approval for an investment format that has repeatedly been rejected by US regulators. Now, just very quickly, a spot market Bitcoin ETF would allow people to buy Bitcoin at its current market price at whatever point in time that is through the stock market. So it gives greater accessibility to people to buy Bitcoin essentially. And there have been a lot of attempts to establish spot market Bitcoin ETFs, most recently by Grayscale, whose attempt was rejected by the SEC. And then they took the SEC to court over the decision. So the fact that Grayscale is currently in court waging this legal battle with the SEC and has chosen to and BlackRock has chosen to file to apply to register a spot Bitcoin ETF at this current time is just so bullshit. But I guess when you're the world's largest fund money manager with $9.1 trillion of assets under management, then what the heck? I guess you can do whatever you want. By the way, $9.1 trillion, that is 40%. 40% of the US's total GDP, which is a staggering amount. These guys, BlackRock, they are absolutely everywhere. BlackRock submitted a preliminary prospectus for the iShares Bitcoin Trust late on Thursday afternoon, New York time. The exchange-traded fund is meant to own Bitcoins that are to be held in custody by Coinbase, the largest US crypto exchange, which again, they're in their own legal battle with the SEC. The SEC sued Coinbase for being an unregistered securities exchange, along with Binance as well. So this is quite an interesting decision from BlackRock, and I think it's really going to ruffle some feathers if the SEC does approve BlackRock's request to register this ETF, and there's a very high chance that it will be successful, and we'll get to that soon. But this is in fact the filing that article references. Guys, it is absolutely enormous. One thing worth pointing out is that they do spend a significant amount of time discussing the risk factors associated with setting up a spot Bitcoin ETF, including things like, what if the Bitcoin blockchain forks? What if there's an airdrop? What if there's a 51% attack? What if the network of volunteers who work on the Bitcoin blockchain just all of a sudden decide to stop working on it? So they've spent a really big amount of time, addressing all of the associated risks that, we as crypto investors and as Bitcoin buyers are already aware of. The ETF, just because they exist within the parameters of the current financial system, they're not exempt, of course, from those risks in terms of, I guess, buying in the blockchain world. Something interesting that's worth pointing out here that I thought was quite interesting, and let's see if we can find it, but it says here, the trust is not actively managed and will not take any actions to take advantage or mitigate the impacts of volatility in the price of Bitcoin. So this is very much a tread at your own risk. retail investors will not be protected just because the trust is set up within the parameters of current regulation. If you are investing in Bitcoin, even if it's through BlackRock, you are still exposed to the same level of risk that any other crypto investor would be exposed to, which then begs the question, why would you buy Bitcoin through an ETF in the first place when you can just own it directly? But of course, as a lot of us know, playing around in the blockchain space and managing your own keys and being the custodian of your wallet is not an experience for everyone. Many more people are used to buying, assets, I suppose, through the stock market. All right, back to the article. The Securities and Exchange Commission has insisted that spot Bitcoin is not safe enough to be offered to retail investors, although funds based on Bitcoin futures are allowed. So the SEC already has this rule in place that's like, no, we don't think spot Bitcoin ETFs are safe for retail investors. So it'll be very interesting to see if they flip-flop on this, I suppose, stance. In denying a request for VanEck to offer a Bitcoin ETF in March, so again, in addition to Grayscale, the agency said the SIBO decision that applied to list the fund had not met the requirements that it be designed to prevent fraudulent and manipulative acts of practices and to protect investors and the public interest because the underlying spot market is too opaque. Again, retail investors are going to be exposed to the same level of risk as, any average crypto investor, especially, not considering the fact that it's on blockchain, but it's also, this trust is held by Coinbase. BlackRock is working with the crypto exchange Coinbase to make this all happen. So let's just say Coinbase fell over. The Bitcoin blockchain's fine. Let's just say Coinbase fell over. Then that would affect retail investors who do buy Bitcoin through the spot Bitcoin ETF. The SEC's consistent opposition to spot Bitcoin ETFs raises the question of why BlackRock would go through the bother of filing a prospectus for a fund that was bound to be denied. The answer may be that its name, size, and traditional finance background would go a long way toward overcoming the agency's opposition to an inevitable development. Now, I want to point out here that BlackRock has had an extraordinary track record of having its ETFs approved by the SEC. In fact, 99.99% of ETFs they've applied to register have gone through. Their success rate is 575 successful applications to one not successful application. So I wonder if it's going to end up 576 to 1, or if it's going to stay at 575 successful to two not successful approvals. We'll just have to wait and see. Something else that is really interesting to point out here is that the BlackRock CEO was categorically opposed to Bitcoin. He sort of took this very Warren Buffett, Charlie Munger stance on Bitcoin. And I'm just going to pull up an article from 2017 where he called Bitcoin an index of money laundering. The BlackRock CEO, Larry Fink, those were his words. Bitcoin, he said, Bitcoin just shows how much demand for money laundering there is in the world. And his comments came right after JP Morgan Chase CEO Jamie Dimon called people who own cryptocurrency stupid. Oh, the irony. So you could say that there are a few reasons for why BlackRock is interested in creating, this spot Bitcoin ETF, where there's money to be made. Fund managers will be right there ready to cash in. And there are a few reasons for why this is now an opportune time to get back into the cryptocurrency market, maybe according to these guys. So I'm going to go into some of those reasons as well. The answer may be that its name, size, and traditional blah, blah, blah. As the world's largest asset manager, BlackRock sees an opportunity to maintain its position in global capital markets through its ETF application. That is from Jeff Feng, co-founder of SEI Labs and a former Goldman Sachs analyst. If they succeed, it signals a strong sense of trust in their leadership by the SEC to navigate the challenges of a revolutionary product alongside regulators while also legitimizing Bitcoin. Now, to me, this quote just seems really off. He's sort of saying, well, the SEC might trust BlackRock enough to navigate the challenges of Bitcoin and blah, blah. But this is not an actively managed fund. I guess going back to this filing where BlackRock says outright it is not actively managed and they will not take any actions to take advantage of or mitigate the impacts or volatility of the price of Bitcoin. So BlackRock isn't navigating anything that all of us haven't navigated before and right now up until this point. I find that comment to be a little bit stupid. Fang, whose company backs the SCI blockchain designed for trading digital assets, says that legitimacy could extend to other cryptocurrencies. Fair enough, given BlackRock's change in its position about Bitcoin over the last few years. A big change. It's clear that they do not view Bitcoin and tokenization as something that can be ignored as a globally traded asset. Now, why is this the case? Why now? Why is Larry Fink all of a sudden so interested in Bitcoin? Well, like I said before, where there's an opportunity to make money, that's where you'll find fund managers. Interestingly, the Bitcoin price action and the Bitcoin, I suppose, market tends to follow a 4-year cycle pattern. And I'm just going to bring it up here to show you. But essentially, you'll see over the period of 4 years, Bitcoin tends to go through these boom and bust cycle in accordance with Bitcoin halving events, where the mining reward is halved every 210,000 blocks mined on the Bitcoin blockchain. So when a halving occurs, typically you'll see a few years of really great price action from Bitcoin, followed by one relatively negative year. Now that is kind of, a very general assessment. Obviously, there are so many factors at play that affect the price of Bitcoin, like political factors, macroeconomic factors, news, traders, the list goes on. But Bitcoin is coming up on another halving. It's expected to take place early next year in 2024. And again, we're going to see the price of Bitcoin possibly experience a ramp up like we have in previous cycles. So it's an opportunity now that Bitcoin has become a bit more of a household name. It's become perhaps a little bit more accepted by the general public. Maybe now BlackRock's like, well, this is just a good time to get into it. And if they've got sufficient demand from, institutional investors and from retail investors, then of course it serves in their best interest to create a vehicle through which people can access Bitcoin and add it to their portfolio. Larry Fink, the BlackRock CEO, called Bitcoin an index of money laundering in 2017, but he has since tempered that view. In August, BlackRock announced that it would offer some institutional clients Bitcoin trading services in an arrangement that also involves Coinbase. A BlackRock spokeswoman confirmed the submission of the registration statement, but declined further comment because of regulatory filing restrictions. Fine. The ETF filing comes as the SEC has been cracking down on the cryptocurrency industry. So interesting timing once again. Last week it sued Binance, the world's largest crypto exchange, as well as Coinbase, alleging that they were operating as unlicensed security exchanges that listed unregistered securities, a category that it maintains includes most cryptocurrencies. However, according to the SEC, Bitcoin is not a security. So Bitcoin is not a security. In fact, the SEC has historically argued that if a cryptocurrency is sufficiently decentralized, then it is not counted as a security, which is probably why they've struggled to define Ethereum based on its level of decentralization. They've avoided labeling Ethereum as a security for now, but again, they could change their tune because they flip-flop about and change their mind most days. Digital currencies group Grayscale is suing the SEC over its refusal to allow the fund management company to convert a Bitcoin trust into an ETF in a case that began in June last year. Grayscale contends the SEC stance that spot prices are subject to manipulation, but futures are not is illogical, since the latter reflect the former. It's the same thing. You're just buying Bitcoin either at market rate or at the price of, or at the future price of a market rate. So it's interesting to see that the SEC took a hard stance against spot Bitcoin ETFs versus futures Bitcoin ETFs. What has crypto Twitter been saying about this? I just want to point out one or two posts here. So a lot of people have said, you know, when the first gold ETF was listed on the New York Stock Exchange, look what happened to its price. It experienced an extraordinary run up in price. I think it was some 370%. But Bitcoin increases by, 400+% in a year, and is the fastest growing asset of the last decade, let alone in history. So people are kind of speculating right now and going, oh my God, Bitcoin, the first Bitcoin spot ETF is coming out of BlackRock, the world's largest fund manager, and it's coming to US markets where there's a huge customer base. They can only imagine what's going to happen to the price of Bitcoin. So some people are like, great, this is great for me. I own Bitcoin and, I'm about to make a big profit because, BlackRock is entering the market. And then there are other people who are feel a little bit negatively about the decision. For example, this post by the Old Taylor, an attack on Bitcoin in 5 steps. 1, BlackRock launches a spot ETFs and pumps the price of Bitcoin to $1 million per coin. We all sell our coins to BlackRock ETF because yay, $1 million. BlackRock owns all of the coins now, not your keys. In a couple of years, $1 million buys you a Happy Meal at McDonald's. Don't sell your coins for fiat. You hodl them in your family for generations. So this is kind of a sentiment coming from the crypto community that is very much against institutions and this domination of large financial institutions by BlackRock, since Bitcoin was originally established to be a currency that can operate independently of any government and financial system. It is a coin that is created for the people, by the people. The irony of that statement makes me giggle a little bit. But yeah, it'll be interesting to see what happens. I feel like I say that at the end of every single one of these videos, but let's watch what happens. If the SEC approves this, I feel like I'm going to have a good laugh about it, because the SEC is coming under fire by US judges for not being more lenient towards Grayscale, especially, during this court process. So, BlackRock might be able to throw its weight around. It may get this approved, but for right now, I'm always DCAing into the Bitcoin market. Not huge amounts, only put in what you can afford to lose. But I'd love to hear your comments on this and what you think about it, whether you are excited by the potential price ramp up or you're fearful of the of the impact that this will have on the founding principles of Bitcoin itself. But until then, thank you guys so much for joining me. Give this video a like and subscribe for more content on current news, and I will see you very soon.